What up, what up, what up, and welcome, all y'all, welcome. You know the situation, man. We are back. God damn it, it is Monday morning, and the markets have fallen to pieces. All I want to hear from motherfuckers right now, all I want to hear is, Tom Pease, you was right, all right? Yo, Doku, if you out there, you listen to this bitch, man, I want you to say something to me. Say it with me now. Tom Pease, you was right, all right? I told Doku last week, he's like, man, oil's not going to go below 43. It's like, nigga, that shit's going to 25. Where are we at today? Oil's at 25. It ain't even been a week. I knew what the deal was. The moment you stand here and eliminate the motherfucking need, you eliminate demand, oil is going to crash. And they're going to make up bullshit. They're going to stand there and go, oh, man, we tried to do this shit. The fuck out of here. Saudi Arabia needs oil over $80 a barrel in order to be able to pay for their social spending. That's the reality of it. All right. And that's where we are. So, what else is going on? All right. What the hell else is going on? Well, I got this CNBC article. Let's read. Let's see what they're saying to the public. You know what I'm saying? We all know the deal right now. All right. All this is built on nonsense. And the moment you have a stiff wind blow on this motherfucking tower of broken ass Jenga blocks, the whole thing's going to come crashing down. So, stocks cratered Monday as investors grappled with the sinking price of oil and the spread of the coronavirus. The Dow Jones Industrial Average tanked 1,229 points, 4.8%, on pace for its worst day since December 2008, when the S&P 500 plunged 5%. The massive sell-off triggered a key market circuit breaker minutes after the opening bell. Trading was halted for 15 minutes until reopening at 9:49 a.m. At one point this morning, the 30 stock Dow dropped. The 30 stock Dow dropped 2,046 points, and the S&P cratered by 7.4%. The sharp decline followed a roller coaster week that saw the S&P 500 swing up or down more than 2.5% for 4 days straight. While Monday's drop was significant, it still didn't crack the 20 worst days for the S&P 500. Which the worst day was actually in 1987. That was a rough ass fucking one. Yeah. Investors continue to seek safer assets amidst additional fears that the coronavirus will disrupt global supply chains and tip the economy into recession. The yield in the benchmark 10-year Treasury note dropped below 5% for the first time ever, while the 30-year rate breached 1% one point early on Monday. The 10-year slid to 0.318%. So, what does this mean? It means people don't want American treasuries no more, which is fucking beautiful. Saudi Arabia on Saturday slashed official crude selling price. Oh, and it also means that we're standing here printing money enough that it's actually affecting how people are thinking that this is going to actually pay off. All right? Because pretty much the treasury is one of the only government bonds in the world right now that's actually paying anything for you to hold it. Because the vast majority of bonds across the world are all, at this point, negative interest rates. It's fucking terrible. You have to pay to hold it. You know what I mean? But it's supposed to remotely beat inflation is kind of the deal. And I think that might have something to do with what's going on with the oil prices. So, Saudi Arabia on Saturday slashed the official crude selling price for April in a sudden U-turn from previous attempts to support the oil market as the coronavirus hammers global demand. The move came after OPEC talks collapsed Friday, prompting some strategists to see oil prices crater to $20 a barrel this year. Crude has become a bigger problem for markets than the coronavirus. Adam Crisafulli, founder of Vital Knowledge, said Sunday, it will be virtually impossible for the S&P 500 to sustainably bounce if Brent continues to crater, he added. International benchmark crude futures plummeted 29% to $32 per barrel after dropping 30% earlier. And West Texas immediate crude futures dropped 30.98 to $28.49 per barrel, on track for its worst day since 1991. The Energy Select Sector SPDR Fund XLE, which tracks the energy sector, tumbled 15%. Bank stocks were smashed as lower yields put pressure on their margins, while an oil crash would cause companies to default in their obligations. JP Morgan plunged more than 9%. President Donald Trump blamed the media and the oil price war for the stock rout on Monday, arguing in a series of tweets that lower gas prices are good for the consumer. They really are good for the consumer. Let's be honest here, all right? Lower oil and gas prices are amazing at the pump for the consumer, all right? When you don't have to stand here and spend like your whole paycheck filling up your car, it makes life way easier on you getting to and from work. It's better for, the consumer as a whole. And then on top of that, like, if you're smart, like a lot of us, you'll stand here and fill up your fucking oil tank at these times. Like, this is the best time ever to buy fucking heating oil. Investors have already been on edge about the coronavirus outbreak that caused major stock averages to tumble into correction territory. As of Monday, global cases of the infection have climbed more than 111,000, with at least 3,800 deaths around the world. The situation is also worsening in the U.S., with New York, California, and Oregon all declaring states of emergency. The idea that lower gasoline prices is going to put more cash in the workers' pockets and give consumer spending and the economy a boost doesn't seem to cushion the blow for stock market investors. Chris Rupke, Union Bank's chief financial economist, said in a note, "They want out big time. The sky is falling. Get out while you can." Wall Street's rose have to eventually hit Main Street's economy hard. Gold, another safe haven, crossed $1,700 an ounce, hitting its highest level since December 2012. Copper hit more than the 3-year low of $246. Copper is seen as a barometer of broad economic demand, given its applications in medical equipment and manufacturing. More Fed rate cuts. They don't have anything more they can really do. Like I told you all last week, the Fed can't save the market. Just is what it is. The Federal Reserve cannot save the market. The market has to be correct. It needs to be cleared out of all this dead wood. We need a fire to burn it out. It is what it is. And this needs to happen sometimes. And a lot of these companies need to go down. I can't wait for the day that we don't have to ever see another Ford on the fucking road. But that's just me being a hater. So it is what it is. The Federal Reserve announced an emergency rate cut last week to combat the economic impact from the virus. Its first such move since the financial crisis. President Donald Trump on Friday signed a sweeping bill of $8.3 billion package aid medical research. The New York Fed said Monday it will increase the amount of money it is offering to banks for their short-term funding needs. To make sure the funding or repo markets are working properly, the central bank said it will up the amount if it offers an overnight protections from $100 billion to $150 billion through Thursday. Look, you have printed us into oblivion. It is what it is. I personally, they're wondering where the money's going. All right, like when it really comes down to it, they're like, where the money go? Like I think the money's going to Deutsche Bahn. Me personally. Right, because Deutsche Bahn's over here, like they're playing games where they're betting against the American dollar and American dollars in trillions almost on a daily basis using these clearinghouses, and they're losing their fucking bets. And so all of the liquid assets is, getting taken out of the fucking market through these measures. And the people are doing this all over the world, but I think it's Deutsche Bahn is doing it, and it's causing the overnight problems. I don't know. I've heard other theories. John Doe got a really good one too. So I'm not sure, but I think that's where it's actually going. I'm not real positive about that. I know some of this stuff is going to go over some of y'all's heads because it is what it is. You're not really into the markets the way a lot of us are. For me, this is kind of my way of nerding out. All you guys who play whatever nonsensical bullshit board game you play, it's the same way I do with this. Traders expect the central bank to slash rates by 0.75 of a percentage point in March. Chances for a full percentage point cut this month were 29.2%. This is just need for fiscal policy. CNBC said on Monday, monetary policy is over. The iShares high yield corporate bond ETF fell 4.5% on concerns that the oil crash price would cause many small energy companies to default, hitting the high yield credit market that they become so large a part of. It is what it is. You can't do a whole lot as far as that's concerned. And I mean, like, when you end up having oil prices fall, it is going to wipe out the vast majority of these fracking companies and most of American oil. And this is why, like, people go, America pumps its own oil, man. We're oil independent. We're energy independent. Like, shut up. All right, you don't understand the way the markets work. Legit. That's what I be trying to explain to people. Like, you don't understand the way the markets work. Like, you have to have oil prices over $50 a barrel for that place to be making a profit. It's that simple. And if it drops like this, these companies are no longer viable. They'll end up getting bought up and just basically waiting until it goes back up because it costs money to do all these things. You know what I mean? Unlike Saudi Arabia, which is just basically scooping it out of the ground with a cup. It is what it is. Anyway, man, y'all enjoy the rest of y'all day. And I mean, I'll probably make another video. We'll see what's up. And I mean, but you know the deal. It's Tom Pizza Pino News. Like, share, and subscribe. Peace be like one, my friends. Later.